The market soars higher. Who doesn't love a bull market? How crazy has this market gotten? There's one company that, compliance won't let me tell you, but have only grown 5% in sales in the last year and have soared. How about yesterday? Big miss for a retailer, the consumer. Wait, how about the car of the future? They've never made money. They sell 1/10 of the 2 largest car manufacturers. You look at CNBC, it's puppy dogs and dandelions. But what are the fundamentals showing us? I hate to spoil the party. Yes, I know everyone thinks I'm Mr. Bear. Not the case. But the fundamentals are telling us something completely different than the talking heads on CNBC. Who's right? Who's wrong? Let's dig into it. Let's go. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click Show More for additional information and links on today's video. Also, if you're looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. Also, compliance can no longer accept comments. Please join us on our Facebook page, link below, if you have any questions or comments about today's video. Agenda, shaking things up. What keeps me up at night's going to be first, those fundamental, that macro data. Book of the month, something new. Our signals, the big charts, sector spotlight, and of course, our game plan. Also, don't forget our most recent video about the Secure Act right here. Let's go to what keeps me up at night. All right, so first, when you talk about what keeps me up at night and what drives that, it depends on where we are in the cycle. This is new. I showed it in our last video. Okay, so you've got obviously cycle 1, 2, 3, 4. Last year, the year before actually, fourth quarter 2018, we were in the fourth part of the cycle. Growth was slowing. Inflation decelerates. Fed was very dovish. Markets were deflating, right? 2018 fourth quarter, down almost 20%. Now, we made a move in the fourth quarter of 2019 to the third part of the cycle, which is growth continues to slow. We're going to show you that. These are the things you're not seeing on CNBC. Inflation accelerates, okay? And how do we take advantage of that as part of our process? Fed is neutral, no doubt. Market stagflation. Well, we're not quite seeing that right now. So when you look at earnings, right, growth is slowing. Now, this is only 24 companies. Keep in mind, the street is looking for a 4 to 5% increase. Now, we've gone from 24 to 12, 1, and then negative in the third quarter. Fourth quarter right now, through those 24 companies, is minus 4.83%. So how about tech? Everyone loves tech, right? Minus 42% with 4 companies so far. That's not particularly bullish, okay? So there's your growth story. Now, I said last video, the biggest story of 2019, the biggest story of 2020, okay? When you look at this, what's going on? The federal debt, the repo program, not going to get into it big time here. I've done it in other videos. I'll have links, but starting in September of last year, the Fed started pumping money into the system for liquidity, which had dried up. Now, we had gone up quite a bit. I talked about being in the 400 billion range. Week ago Friday, they did $89 billion in one day, which was oversubscribed, by the way. So we have now added over $500 billion. Each 1% growth in the federal debt, okay, has equaled 1% growth in the S&P. One of the Fed chairs yesterday admitted it might be driving the market. You think? Okay. How about commercial loans? If there's liquidity, how can loans be going down? That's the point of liquidity, to loan money out. We're not seeing it. ISM manufacturing, the key, right? Jobs, and also the key hit our lowest number in 14 months, 47.2. below 50 is contracting. Everyone keeps on saying that we're hitting a bottom. Not yet, folks. Really have to continue to look at that. How about continuous claims on jobs? Now, you look here going back to 1970, the grays are the big spikes, which are recessions, okay? Now you look here, and we've slowly gone up. Let's zoom in a little bit. Well, guess what? There's your fourth quarter 2018. When you zoom in on that data, it's getting worse, okay? Month after month, we're not talking about this. I'm looking at it as part of our process. CPI inflation, so we talked about this as part of the cycle. Inflation continues to go up, right? So can we take advantage of that? Absolutely. We'll talk about that in a second. Now, real GDP, we're coming about at 2% right now, but our research is saying a negative number, below zero or around zero, with a little bit of a wiggle room of about 0.5%, okay? So how do you have that unemployment report like you did last week, okay, and have GDP going up? Something's wrong. Let's do something new here, Book of the Month. So, new to the channel, Book of the Month. Obviously, I do a lot of reading, a lot of research, of course, love my charts. But sometimes you have to go a little bit deeper. This month, the big story is what? China, right? Or I call it the no deal in China. It's all about soybeans. Doesn't mean anything. Over time, you've heard me say consistently, we're never going to have the deal that the administration's talking about. That has come from reading this book, The 100-Year Marathon, China's Secret Strategy to Replace America as the Global Superpower. Michael Pillsbury is the author. Great book. You read this, you will understand why China is not going to make a deal, because they want to be number one. Local clients, I'm here at Bethany Beach Books. You can pick it up, looking at the beach in the background. For those not local, we'll have a link below. Next up, let's go to the big charts. All right, back in the office, back to the charts. Obviously, wearing my bull market, because how can you not look at this and say the market is not bullish, right? So everything continues to go up. You've got a lot. This is called basically a big breakout. You know, the only thing, and I've talked about this constantly, is negative divergence. Relative strength is really down and the market's up. That is not a good sign, but despite that, positive. Weekly chart, obviously positive, right? Look at it, taking off 1.73 for the week right now. This chart's live on Friday morning. And then you've got daily, okay? What do I see here, if anything? So positive long-term, positive mid-term, obviously positive in the short term. The only thing that's surprising to me with this kind of breakout is that the VIX volatility index hasn't broken below 10. It stayed above 12, which is highly unusual with this type of run. So everything here, bullish, right? Positive, no question about it. All right, so let's take a look underneath the hood and why I continue to have concerns. Okay, right here, a chart we show very frequently. So you've got the S&P in black. Obviously, that goes straight up there. Okay, behind the scenes there is a histogram, the gray, which is new highs minus new lows, okay, on the New York Stock Exchange, which of course is the broad market, okay? And you can look at last year, and we've talked about this, right? When you're hitting highs, you're hitting pretty decent numbers, okay? I mean, heck, I could draw a line right across, and we're not seeing that, but look right here, okay? I mean, we're just not seeing that oomph, that push that you would expect. Now, the last, and this is not a new chart, but I'm bringing it back, okay? This shows why this market is so grossly overbought, okay? What we have here in the colors, okay? Red, all right, is your 20 PE, so your price earnings ratio, okay? 15 is blue and 10 is green, okay? What does that mean? So the black line, okay, of course, is the S&P. If we were to get back to 20 times earnings, you're looking at about a 20% correction. If we were to get back to fair value, the long-term average, which is 15, okay, we're talking about 40% in losses. So when you look at this market that continues to go up, it scares me. It's not going up with fundamentals. It's not going up with earnings. It's all driven by the Fed. And to get back to fair value, which, again, a 20% pullback puts you at 2,600 and change. Again, I'm not saying it's happening, but this is clearly a stretch market. As an investor, you have to look at this and think, are you comfortable with your portfolio right now? We talk about treasuries. Anything here? The only thing we'll talk about is the street. Wall Street says we're going above 2, and we're not doing that. So the bond market continues to tell us a different story, and we saw that this week, okay? Now, if this is the kind of data that you're looking for, click below to schedule an appointment. Understand if you go to my website, yes, I do have a minimum, but for our Wealth and Wisdom viewers, we've got a special plan to do financial plans to help you out. So, next up, Sector Spotlight. All right, so when you look at the Sector Spotlight, I'm going to continue to wear my bullish shirt. Why? Because the market is way more than the S&P. And when this market is way overstretched like it is, okay, it concerns me. So if I can make return alpha in other asset classes, I'm going to do so. So we're taking advantage of what we saw in cycle 3, inflation rising. So here's the CRB index, and pretty much straight up, that's a bullish trend line. Sure, we've had a pullback. That was from Iran. We're kind of consolidating right there, okay? But it's still in a bullish trend line. So when you look at commodities index, obviously that shows inflation. Next, I look at the dollar. Why? Correlated to commodities. So the dollar, right, correlation, if they're 100% correlated, move together. If they're negative, they move in opposite directions. So if the dollar goes down, commodities go up. Right now we're at 0.6, not surprising with a little pushback here, but we were about 0.9. So I continue to watch both of those, and they will help drive my decision on oil. Okay, this is one of our big holdings here right now. Why? When you look at what happened, again, that's all Iran, right? So what do you do in that scenario? Now, last year we talked about this when the Saudis were bombed, and I said, don't buy it, right? And then, of course, it came right back. So you have to be careful. Where, in this case, because we're in a bullish trend line, when it pulled back, it was an opportunity to add to your position. And that's exactly what we did. Volatility. When it's above 35, it got up there. We're back down to 27. Really like that. Hopefully we'll see another push as we move forward. Now gold, same thing with the dollar. Opposite as far as the correlation. Gold is taken off, right? A little bit of a pullback. Why? Because the dollar, right? So in a bullish trend line, if you haven't gotten a gold, this is an opportunity. Now I have my full allocation to gold right now, so I'm not adding unless we have new dollars with an existing client, okay? So the next one, at the beginning of the year, when you look at inflation, you want to still diversify amongst that. And how about this one? Cocoa. What? Okay, everyone thought I was crazy at the beginning of the year, kind of meandered along, held support there, which is your 200-day, broke above your 50-day, and it's been a beautiful looking chart and is up nicely year to date. So as an investor, if you're looking to reduce risk, the market is so much more than just the S&P and Dow, right? You can still get that alpha, which is performance, right, and diversification without being all in the S&P. Let's wrap it up with fear and greed and our game plan going forward. Fear and greed. Couple weeks ago, 93. Good news is we're down to 91, which shows extreme greed in this marketplace. All signs positive on the charts. Underneath, not so much. So yeah, they're positive, but I definitely am very cautious right now. I am diversified in other sectors, not just the market. As always, thanks for watching. Michael Loftus, Wealth and Wisdom TV.